Today, we look in depth at the SPDR S&P 500 ETF, which we rate at 10 out of 10. Our proprietary Trackstar data sees the top 5 ETF searches by financial pros in the past month. When most people talk about the stock market, they're referring to the S&P 500 index, which is made up of the top 500 companies by market capitalization. Everyone from hedge funds to the average investor tries to beat this index year in and year out. Many prefer the passive investment style offered by the SPY ETF, which tracks the S&P 500 index. Its holdings include familiar favorites from Apple to Amazon, Tesla to JP Morgan. Because the ETF and index are market capitalization weighted, the index skews towards technology stocks, which dominate the equity landscape. The S&P 500 always owns the most prominent companies. And since those are the ones that have outperformed the market over the last decade, the SPY ETF has a phenomenal return whether you look back 1 year, 3 years, or even 3 decades. Financial pros are big on index-related ETFs, especially those tied to the S&P 500, NASDAQ 100, and Russell 2000. Here are some of their top searches. What's interesting is that despite the poor long-term performance, financial experts look at the SQQQ more than the QQQ, though not as much as the TQQQ. They're looking at gaining short-term leverage rather than planning for the long term. We think you can't go wrong using the SPY ETF. It's a core holding where money gets parked in investors' portfolios for a reason.